Here's the host of Good as Gold, Nick Grovich.
Hi, welcome to the show. Carl Ladas filling in for Nick today. He's out on business and asked me to do the show for him. Quick thing, wanted to thank everybody for showing up for Financial Fest this past weekend. It was a blast. Unfortunately, I missed it due to previous engagement that I had to take care of, but it sounded like everybody had a good time. Nick had spoke a couple times, I believe, and met a lot of nice and interesting people. So thank you for everybody for showing up. Quick market update. Gold's trading at $10.80 roughly right now. Silver's at $14.30 and platinum at $855. Just so you folks know, gold's at a 5-year low right now. Silver's at roughly a 6-year low, and platinum's at a 7-year low. So if you're thinking about buying, I don't know how much lower it's going to go, but you're buying at a pretty good time. Real quick, I wanted just to go over some basics. I want to expand upon what a premium is and spot price. Spot price, folks, is the baseline to which all buys and sells are figured off of. You can't buy or sell at spot necessarily, especially with bullion. You have a premium figured into it. Now, the premium's paid by American Federal. We pay our supplier a premium for different types of bullion products, and then we mark it up our premium and sell it to the customer. So a premium is the value over the base metal product. So if spot's trading at $1,000 an ounce gold, there could be a 4% premium on Gold Eagles that we pay to the dealer, and then we typically mark it up 3%. So you would pay 7%. So I just wanted to kind of have a real basic show, go through the basics on how everything works out there. As far as premiums go right now, silver premiums have slowly started increasing on Silver Eagles. I had a client call yesterday, actually 2 or 3 clients called yesterday, quoted them on silver, and silver is up about 15 cents this morning when I talked to one of them this morning. However, his cost went up 40 cents, believe it or not. The premium on Silver Eagles typically this time of year starts to climb. Just a brief history, in July, the mint oversold 6 million ounces. They projected 4 million. Premium shot through the roof. I'm going through this real quick for you. Premium shot through the roof, came back down about 3 weeks ago, 2.5, 3 weeks ago. We started seeing the premiums at the normal ranges again. Well, now they're starting to creep back up, and this is pretty typical this time of year. What is happening is the U.S. Mint they'll be shutting down production soon here to retool for the 2016 runs. Now, when they do that, it's obviously the primary market. That's what they are. We'll see an increase in premiums. I think what's going on right now are the market makers are realizing that this could be happening any day now. They're starting to slowly increase premiums. So that's something to keep an eye out for. It's real important in this market. You could wait for silver to drop to $10 an ounce, but that doesn't necessarily mean you'll be able to buy any silver close to $10 an ounce. It's simply because availability in the precious metals market sometimes can be tough. Gold premiums, pretty much steady. Availability is just fine, just about on any type of gold bullion you could want. Platinum, availability is the issue. Now, you have to remember, it's probably less than 10% of all platinum mined annually. So all the 10% of all platinum mined in the world, less than 10% is actually turned into tradable bullion. So even though prices are down, bullion can be hard to find. There just isn't a whole lot of platinum tradable bullion available. And it changes periodically. One day we'll have bars available. One day we'll have maple leafs available. We might get really lucky and have a load of platinum eagles pop up. Right now, primarily what we're dealing in, I believe, is just platinum maple leafs as far as availability. So something to keep an eye on. You need to really think about why you're buying. I try to tell everybody, figure out why you want to buy. We can help guide you when you call in and ask you some questions and make sure you're on the right track. But one thing that my job is to get you the best product at the best price. And unfortunately, if Silver Eagles are costing me $6 over spot, I really don't think that's a great price, because I can't, for me to make my markup, you're paying $7 over spot, or $6.50. So you need to keep that in mind. We talk about primary markets once in a while and secondary markets. Just a brief explanation of that. Primary market is all of your world mints, including the United States Mint, making new coins, and that also includes refiners making bars, bullion, deliverable bullion bars as well. So they're brand new right out of the mint or right out of the refinery. Once they become once they turn into the market, that is called the primary market. Now, the secondary market is when mom and pop or myself or whoever sells what they own. So if I were to sell my gold eagles to a dealer, then they would become available for somebody else to buy. That's called the secondary market. So a lot of times when you see low prices or a big dip in the market, a lot of people aren't selling. You've got an awful lot of buyers. So if you take into account the U.S. Mint running out of silver eagles in July, all of a sudden there isn't any secondary market because nobody's selling silver because we're at a 5 or 6 year low. So there's no secondary market. The primary market's very limited. Premiums shoot through the roof. So that's kind of a snapshot of what can happen out there. Low prices definitely can lead to shortages. And it's across the board. Commodities in general. I've got a couple of clients that are they're big oil guys. And one of them I had a pretty good conversation with about a month ago. He has an oil drilling company and obviously owns a bunch of wells and land. And he's got the mineral rights too. He's been in the business. His family's been in the business for well over 100 years. First time I saw him was about 4 years ago. Oil was over $100 a barrel, and he had everything cranked up to full capacity. He was drilling new wells. He was expanding. Well, at $40 a barrel, he's basically shut everything down. He's only running a couple wells right now. He's not drilling any new wells. And he's just basically bringing enough money to keep operations up and running. He's laid off guys. He's downsized. And it's just a normal restriction in the market. Now, remember, this is a seasoned guy. He was brought up in the oil business. He's used to it. And I asked him if he was worried, and he said, no, it'll come back because this is just a normal course of business. Now, what happens, though, is you got a lot of guys that start jumping into the market when you start seeing new highs. New buyers. You've got new refineries popped up in the oil business, new wells in the mining business for metals, new mines get popped up. But these guys tend to get in, once the market's rolling already. They're not established like my old friend in the oil business. And a lot of those guys cannot absorb a significant downturn in the market. So you get a lot of guys going out of business. So what happens is production slows. And we're seeing this in platinum right now in South Africa. 3 of the major mines in the world are in South Africa. They're running at close to 30% output. Well, the reason they're running so low is just enough to, just like the oil guy, keep things running. Keep things running and just bringing enough money to pay the bills. So the problem is there's no above ground platinum reserves. That's one of the reasons we love platinum. It wouldn't take a very significant bump in platinum to really throw out a major shortage, especially of the physical platinum, especially since only 10% or less is actually turned into tradable platinum. The other 90%, 90 some odd percent goes off to industrial users. It looks like we're coming up on a break here pretty soon. We're going to talk a little bit more about this down the road. Hopefully I have enough content to get me through the whole show. If not, I'll start talking really slowly. So bear with me, and we'll talk to you in a little bit.
Once again, here's Nick Grovich.
Hi, welcome back. Carl Ladas filling in for Nick Grovich. He's out of the office. On the previous segment, we were talking about availability and when prices are down, how mines constrict, they slow down production. It's in commodities in general, across the board, oil, you name it. And what happens eventually is you get to a point where you're at bottom or near bottom because of and it just doesn't take that much to turn things around and run into what is actually a shortage. That's where you start seeing higher premiums. Again, back to the silver. When you have silver eagles, which are the most widely or most commonly traded bullion coin in the world, all of a sudden they're not available or the price is too high, then buyers will turn to other products. They'll turn to maple leafs or philharmonics or bars or silver rounds. Now, there just isn't enough of that stuff to make up for the demand of the eagles. So you take the eagles out of the equation, all that other stuff gets bought up. Next thing you know, there's really very limited physical silver to buy, which in turn, even though the price of silver doesn't go up, you have these huge premiums start shooting through the roof. So typically, when you have a constriction in the market, lower prices, production slowed, typically tends to lead us to believe it's near or at bottom, and we typically can see a large rise in the markets because of all this. Now, once things start rolling again, Premiums drop, prices go up, production increases, and everything's back to rolling as normal. Again, I had a customer call the other day. He ended up buying some silver today because, honestly, the premiums on the Eagles have been increasing for the last 2 weeks. 10 cents here, 20 cents there. But, I had talked to him. I said, listen, what will happen is, just to give you a brief summary, once they start ramping up 2016 production, once those become available, then the premiums will drop. The problem is you're paying less premium, but where is silver going to be when that happens? It could be $2 or $3 higher. So you got to kind of weigh weigh each side of the equation and make a decision. He decided today he was just going to buy his silver and call it a day. Anytime you can buy a 500-ounce monster box at less than $1,000 delivered, to us is a good price, especially since it's probably the lowest price we've had in 6 years. There are ways to make money in this market, even if it stays kind of flat, or we've had pretty much been on a downward market since October, basically. One thing we try to tell all of our customers, the most important thing you can do is take a look at your portfolio. Have a portfolio evaluation performed for you on your precious metals. A lot of people are into many varieties of products. Some are great, some are bad. Probably half the time I tell people to keep what they own and just work with it. And sometimes we'll give some basic recommendations on maybe looking at some diversifying into other metals. If you're too heavy in one, maybe we talk to you about maybe converting a little bit of it into another. And again, if you have any types of coins out there, to talk about the rare coin market versus the bullion market, they're kind of intertwined, but they're really not. The bullion market is a global market traded daily. If you own bullion products that are deliverable on the exchange, you can get out of them at the drop of a hat. So if gold hits $5,000 an ounce and you want to sell, picture $5,000 an ounce gold, we're probably going to see $200 to $400 swings. So you wake up in the morning and it's up 200. By the time tomorrow rolls around, it's down 300. You're going to see large swings at that price point. And if you want to get out at the high, deliverable bullion is the only way to go. You can pick up a phone call and sell it. You don't even have to drive it or ship it off to the buying dealer at the time. They can lock you in over the phone, and you're out of it. Now with the rare coin market, even the lowest quality, most common date rare coins, they're not deliverable, which means the buyer, which would be us or another dealer that's buying it from you, we take on a significant market risk. You see, when I buy bullion from you at the high at $5,000 an ounce, I lock you in. I can either hedge my position by pulling a contract, or I can dump it right into the market right away. So literally, the gold travels through my hands in about 5 minutes. I've sold it, and I can turn it into cash just as quickly as you can turn it into cash. Rare coins, or semi-rare coins, even just circulated 20s, $20 gold pieces, you can't do that with. There's the market for the rare coins is other dealers and retail buyers. That's the market. It's not a global market. There is no futures contracts you can take out. You can hedge gold, but you can't hedge the premiums. So what happens in a high like that, what you see is dealers don't want to buy them because who's buying at a high? Everybody wants to sell, especially if you own rare coins. People are going to be getting rid of them. All of these are reasons why you need to take a good look at your portfolio now and develop an exit strategy before the time comes for you to liquidate. Even if you're leaving them to your kids and you have no idea or no inkling of ever selling them, but you want to leave them to your kids, you need to look at it and think about your kids. What's going to be the easiest way to divide them equally between all the siblings and whoever your heirs are? And how hard is it going to be for them to turn it into cash? So another reason to really take a hard look at your portfolio. Speaking of portfolio reviews, I just did one recently with a client of mine, and he's sitting on Carson City Morgan dollars. He's got a whole bunch of them. They're from the GSA hoard. It was the Government Service Administration hoard that was discovered in the 1960s, and it took them 5 to 10 years to finally sell them off, but they started selling them, I believe it was in the 70s. They're uncirculated Carson City coins that were found, I believe, in one of the mints. They were actually used once upon a time to back up the dollar, believe it or not. So every silver certificate out there had actually a silver dollar behind it somewhere. They're all uncirculated. They put them out and they sold them. Now these coins have been trading anywhere from the common date ones for maybe $150 to as high as the highest valued ones around $5,000. Most of them that we see are the $150 to $500 or $600 price range. Now, it's a rare coin. It's an uncirculated rare coin. If you bought it from the mint, you're doing very well because you got it for probably $30 or $40. Now, here's the problem with them. When silver was at $40 an ounce, they were worth pretty much the same price they are today at $14 in 30-ounce silver. So is that something you want to own if you think silver's going up? Probably not. Now, if you think silver's going down, then yeah, I mean, maybe you own them. But who buys metals thinking that they're going to go down? So that's something to take a look at. The object is to get as much silver in my client's hands as possible. So I recommended to him, take advantage of the price of silver being down. Don't wait for it to start to move. Get a valuation done. Let's convert those silver GSA Carson City Morgan dollars into many, many, many more ounces of silver eagles. That way he's got a huge pile of silver eagles that are going to travel when silver starts moving up versus sitting on the same dollars that didn't do anything the last time we went to $40 silver. They were worth within $10 of what they're worth today. Another client just circulated Morgan dollars. We've seen the highest premium on those we've seen in years. To make the math real simple, he had roughly 100 Morgan dollars. They're not an ounce of silver. They're 3/4 of an ounce, 0.77 ounces. So he had 77 ounces of silver because we took advantage of the premium. Again, the premium is the value over the 3/4 of an ounce of silver that's in the coin. I was able to I made a little bit of money off of it, and I think I got him almost 37% more silver than what he was sitting on. So he ends up with a bigger pile of silver, and to boot, he ends up with silver bullion eagles, which are 100% liquid that he can divide up amongst his heirs, or if the time comes to sell, he can make a quick phone call, and he's out of them. I can lock him in over the phone, and then we just have to handle the shipping and be paying him with a check. So pretty simple deal there. So exit strategy is something that very few people, when I ask them what their exit strategy is, it's something that very few people I talk to, especially those that own rare coins or semi-rare coins, they've never even thought about it. Nobody's ever asked me about an exit strategy. How am I going to sell this stuff? Well, they tell me it's really easy to sell. But I went to them and tried to sell it, and they didn't want it. They said they didn't have any buyers for them at the time, so they couldn't buy them. Again, that's a reason to have your portfolio evaluated. Again, now there are rare coins out there that can be advantageous to owning, but we're talking actually rare coins. Okay, so this can get confusing. You've got semi-rare coins where there's an awful lot of them, but they're really not that rare because there's so many of them. But they're touted as rare coins because they're old. So you've got a lot of old coins out there that really aren't rare. Now you do have some extremely rare coins that are traded. You don't see them advertised by dealers simply because dealers can't get their hands on enough of them. If you have a coin that there's only 5 known, as a dealer, you can't get your hands on all 5 of those to promote and to your clientele. So mainly when you see a dealer promotion, they're typically very common coins that are easily, the dealers can easily get their hands on and promote them that way. So what I want to talk about in the next coming segment, I want to expand a little bit about the rare coin, the actual rare coin market when it comes to rarities, the king of the rarities, the pedigreed coins, stuff like that. It's a whole different area that you can get into. It's not for everybody, but you can get into it, and it's actually done fairly well for preserving wealth for a lot of the investors that can afford to get into it. The question is, can you afford to get into it? Some of those coins are upwards of several $100,000 to $1 million. We'll be right back here shortly. Again, feel free to visit our website at AmericanFederal.com or call the office at 800-221-7694 if you have any questions. Thanks.
Once again, here's Nick Rovich.
Hi, Carl Ladas filling in for Nick today. He's out of the office and asked me to get on the show. And anyway, long story short, a couple of segments before this, we were talking everything from not ratios, but from bullion prices, liquidity, premiums, spot price. We've covered a lot of information this show. So if somebody has any questions because I didn't touch on it long enough, please call the office at 800-221-7694. Ask to speak to Brian, Bob, Don or myself or even Nick, if he's available, I'd be more than happy to take your call. We were talking about rare coins as part of an investment portfolio a little bit last segment. Just wanted to mention a couple of things there. There is a place for rare coins in a portfolio, but they need to be the right coins. They don't need to be the coins that everybody else is being offered. They don't need to be the coins that are promoted by dealers. Remember, it takes a significant quantity of a certain type of a coin for a dealer to promote. And if there's one thing we've established in this market since this show started, is what you're seeing advertised by dealers out there is typically what is very available and not very rare. So you really want to stay away from that middle ground. You want to either go stay in bullion or in actually a rare coin. Now, you need a reputable dealer that understands the market and realizes what a rare coin is that you have a chance of doing well with. Now, there's an awful lot of rare coins out there that are extremely rare. The only thing rarer is a collector market to support their prices. Give you an example. Right now, there's an awful lot of silver commemorative and gold commemorative coins out there. They peaked during the, I think it was in the 90s. Did very well. You can get into those coins for next to nothing today. They're not a great investment. They haven't turned out to be one. A lot of them are extremely rare. However, if you're a new collector or you're looking to get into something rare, it's a great time to buy some of them. You can get into coins that are worth a small fraction of what they were worth at their peak. Not a whole lot of downside risk. So that's one area you could look into. Again, most of my conversations directed towards the investor or the guy looking for a hedge. Now, obviously, there's the collectors out there, which we love. Collectors have different reasons for buying this stuff. They enjoy the history. They enjoy the learning about the coins. A lot of them often know more about their collections than we even do. But that's a hobby. Then they know the markets. They know approximately what the prices are worth or what the coins are worth. And they typically find a good dealer that they stick with for years and years and years that takes care of them. If you're an investor buying from a hedge, you really don't have that option. You're inundated. Once you get on one guy's mailing list, it seems like you get on 20 others. And you're going to get hammered by a whole bunch of different guys, different dealers trying to sell you gold. A lot of them are selling lost leaders. I'm getting a lot of calls lately. There's a dealer, an outfit out of California selling 10th ounce gold eagles at $109. Well, that's below our cost, folks. And I had two clients call me. It was funny. They called me within probably about an hour of one another. And I explained to them it's a lost leader, find out how many they'll sell you. Because if they'll sell you a bunch, I'll go buy a bunch. Because if they're selling for cheaper than what I can buy them from my market maker, I'll certainly buy them and then resell them for that, and make a lot of money that way. One guy called back and said that they wouldn't sell him any. They tried to talk him into buying pre-33 circulated 5 Indians. And they were selling them to him at a price point to where they were going to make almost $200 a coin. So they got him to call, though, because they offered those eagles at such a low price. The second guy called me and said they'd only sell him 10, which is 1 ounce of gold. So I had to explain to him, the conventional way of getting new leads costs a lot of money. Now, these guys obviously are willing to take a small loss. You're only talking probably $20 or $30 loss on an ounce of 10th ounce gold eagles. That's a heck of a lot cheaper than sending out mailers and at radio and advertisements and a radio show and stuff like that. So the nice thing that both of them did was they actually shopped around. And I see too many clients that just take the first guy they talk to's word and they go off and they buy a fortune from him. Feel free to shop around. There's no hurry. If you see gold going up $100 in a day and you want to buy gold, of course, that's a different story, but you're buying bullion. Okay, but if you've got somebody calling and telling you a burnished gold eagle and he wants $1,800 for it and tells you it's the last one they have and you better get it, it's a hot item, those are all signs of, buyer beware. You need to call around, check prices. There's nothing wrong with that. We're not always the cheapest guy in town. We're certainly never the most expensive either. But you need to make sure you do your due diligence. Even if you are buying bullion, make sure you're getting it from a reputable dealer that's been around a while. Too many times I've seen people send off good money and never see their metals, and the next thing you know, the attorney general's after the guys they bought from. The business is shut down. The Better Business Bureau has an F rating out there on them. It's happened an awful lot. A lot of these guys, again, pop up when the prices shoot through the roof. When we had new highs in gold for darn near 2.5 years straight, you saw everybody, including barbershops, buying gold. We buy gold, we buy gold, we buy gold, everywhere you looked. Again, it's real typical of a moving market. Just like we talked about earlier, when you see oil going through the roof, you get all these new guys jumping in, manufacturing increases, everything shoots through the roof. Well, now we're down at a lull. Again, my client in Texas, he's only running 2 wells to keep his costs paid for, keep all his expenses paid for. Same thing happens in gold right now. You got a lot of guys that are still kind of lingering. They jumped into the market when it was going up, and they're trying everything they can to stay afloat. The problem is a lot of them are just trying to do what's best for their own pockets, not what's best for their clients. So you need to really check around and be careful. Rare coins. If you're interested in rare coins, give us a call. If you have any questions about them, obviously give us a call at 800-221-7694. If you're buying rare coins as part of your portfolio, you need to be very, very, very careful on how you do it. And what coins you get into. And you need somebody representing you that you trust, that's very knowledgeable. Unfortunately, to get into the caliber of rare coins that have done fairly well as an investment, you're going to need a substantial amount of capital to do that. Probably starting at around $50,000 to $100,000 to invest in one coin. That's why we say it's really not for everybody, okay, to get into the rare coin market. And a lot of times you'll see dealers advertising semi-rare coins and then using the story of how the rarer date and the rarer mint mark performed. Well, you're taking, you've got a run of St. Gaudens, and there's a couple extremely rare coins mixed in there, including some proofs that have done fairly well. You can't take what that 1915 proof 68 St. Gaudens did at recent auctions and pertain that information to a common date 1924 Saint and MS65. They're not the same coin. They look the same. They've got St. Gaudens as part of the name, but that's about as far as it goes. So you've got to be very careful out there with savvy investment information and salesmen on the phone. A lot of advertising. Another part of the coin market, not a part of the coin market, but speaking of rare coins, if you do own some rare coins, there's a new certification company. Nick's talked about it. I've talked about it in the past. It's called CAC. It's CAC, Certified Acceptance Corporation. Now, this is really taken off. We're talking, again, with the collector market. John Albanese, who co-founder with David Hall, PCGS, split off shortly after they founded PCGS. He actually founded NGC, Numismatic Guarantee Corporation. They're the other recognized grading services, grading service that grades rare coins and assigns them a grade and guarantees them for authenticity and quality. He sold NGC years ago and started realizing, you could line up 10 St. Gaudens in a row and one or two of them looks really nice. Good eye appeal. So he started thinking, he realized, the MS65 is a grade. You've actually got an MS65.1, 2, 3, 4, 5, MS65.6, 0.7, 0.8, until you get to the higher end of the spectrum at, 0.9. And then sometimes there's MS65s that, in his opinion, again, this is a very astute, well-known coin guy. There's a lot of coins that could maybe even qualify for the next grade up. So you could have an MS60, 5.9 that might qualify as an MS66. So what he does is he goes through and he looks at coins that we submit him, and coins that are MS65.5 or higher. Again, this is any grade, but if they're at the upper end of the grade, he'll label them and designate them that they meet his approval, and it's really taken off with collectors. We see a lot of those coins bringing a lot more money than what they do without them, without the CAC sticker on them, without John Albanese's stamp of approval. So if you own any coins that are rare, give us a call. Even if you're not in the market to sell, or if you're a collector, if you're an investor who has high-end coins, it's really worth it to you at this point in time to have somebody look at them. We'd love to do it, and possibly send them off to John and see if we can get the CAC sticker on them. And then that prepares you for the future when you do want to sell. You've already got the certification, and typically we're seeing some pretty large gains with those coins. It can't hurt. A little bit of extra pedigree on something like that cannot hurt. So feel free to give us a call. Back to the bullion markets, we're going to be expanding a little bit upon that and talking about how you can make money even if the markets don't move in the next segment. Again, you can contact us at 800-221-7694 or our website at americanfederal.com. Talk to you soon.
And here's Nick Grovich.
Hi, Carl Ladas filling in for Nick. He's out of the office today and asked me to fill in for him on a radio show. I sound like a broken record. I think I've said that after the last 4 breaks. But anyway, kind of give you a rundown on how a call goes. And a lot of people I've talked to, well, I was reluctant to call you. I didn't know what was going to happen. We're very low pressure, folks. We're really there. We ask questions. We try to get a feel for what you're trying to accomplish so that we can better suit your needs on what you're trying to do. Give you an example. A call I typically take. I had a lady call me the other day, and she had wanted to buy some gold, and I asked her why. Why do you want to buy gold? And the first thing she said was, "You're the first guy that's ever asked me why I want to buy gold." She said she had called 3 other dealers, but nobody had ever asked her why. Anyway, we got to talking, and I asked her, give me a snapshot of your total portfolio. I mean, I'm not a financial advisor, but I like to just get a picture of what you have. And she explained she's got a 401k. She's recently retired. Her house is paid off. She's got $50,000 in cash in the bank. She's not making any money on it. Her dad always told her that she should own gold. So I kind of got a snapshot of it, and then I asked, well, so you're looking to do something with the $50,000 in the bank? She says, yes. And my first response was to her, you need to probably talk to a financial advisor first. That's the responsible thing to do on my part, is to say, listen, and we've got some guys that are pretty good that we can refer to you if you need them. But have her talk to a financial advisor first. Most financial advisors recommend, typically the guys I talk to, anywhere from 5 to 20% of a total portfolio in precious metals. So with what she had, we were talking roughly, about $10,000 or $15,000 out of the 50 she had in the bank. And her financial advisor wasn't too keen on putting it into physical metals. A lot of guys aren't, but they work for you, folks. And if you want some security at home that you've got that's tangible, tell your financial advisor your wishes, and then find somebody like us that can help you out. We'd love to help you out. But long story short, we started talking about her $15,000 that she wanted to spend in precious metals, and then I started asking her questions about, what do you think the metals markets are going? She basically she thought the metals markets were going up. She wasn't real happy about what was going on in the world. She was concerned, like a lot of us are. Her stocks were doing okay, but she was afraid of the stock market, having a huge correction, which a lot of guys are as well. But long story, we ended up talking about different types of metals based on ratios. Now, a ratio is, gold-silver ratio. How many ounces of silver does it take to buy an ounce of gold? That's a real simplistic way of looking at it. And a lot of ratios, if you're a ratio trader, ratios tend to always play out. The timing of them is the question. Sometimes it can happen real quickly. Sometimes it could take a year or decades. But in long run, ratios typically always play out. In diversification, financial advisors recommend, a good one's going to tell you to be diversified. Nobody wants you to put your eggs in one basket, and we don't want you to do the same either when it comes to precious metals. So what I had explained to her is that she needs to own a core holding of gold, and probably always have a core holding of gold. Have some gold. And that's the consummate hedge. It has been for thousands of years. And she agreed. So we figured, out of the 15,000, why don't we start with, 5,000 of it in gold just to get started. So she agreed on that. And then we started talking about, the gold-silver ratio. And, normally you hear different ratios out there. The one I hear the most is 16 to 1. Well, it was never 16 to 1 in a market where you could own gold, physically own gold and silver. It was set by the government. If you take an honest look from 1974 to today, which was when Nixon got rid of the Roosevelt's law about public not owning gold anymore, you're able to own gold in 74. The ratio's been right around, I believe, around 60 to 1, 60, 65 to 1, and there's been the average trading ratio, so 60 ounces of silver per ounce of gold. Today, I believe we're somewhere around 73 to 1. So since the ratio is at more silver to buy gold, and being that silver is so cheap, you buy silver right now over gold. So we agreed, with her, and she agreed that, yeah, maybe we should put some money into silver. So the question is, we had $10,000 left. Did we want to put it all into silver, or did we want to maybe look at platinum? Well, we started talking about platinum, and as you folks know, that we're very high on platinum right now, and we started talking about the gold to platinum ratio and all these different things. But what we finally ended up with at the end of the day was a well-diversified portfolio of roughly a third gold, a third silver, and a third platinum, with the long-term goal of watching the ratios, especially with the platinum to gold ratio, watching for it to flip-flop back to where it was. It'd be wonderful if it goes back to where it was in 2008 with platinum at $2,400 an ounce and gold less than $1,000 an ounce. Object she could convert at that point into even more gold. So she could take $10,000 today and buy gold, or she could take $5,000 and buy gold, $5,000 and buy platinum, and then when the ratio corrects, she ends up having a bigger pile of gold because she converts that platinum into more gold than what she would have ended up with today. Hopefully I didn't confuse everybody on that one. If I did, call me at the office. I'll go slower. But yeah, it's a ratio trade. That's a great way to get in and out of metals, and at the end of the day, end up with a larger pile, obviously worth more money. Something we very, very much so believe in at American Federal. The other thing that you can look at, I've got a guy I talked to yet this morning as well. I talked to a lot of people throughout the course of the day, believe it or not, usually 20 to 30 people, sometimes 40 different people a day. So I get a lot of perspectives and get to talk to a lot of really interesting, nice people. He was dead set on buying gold, and I said, that's fine. He's a gold bug. So we're going to get him gold eagles. He wants super liquid, premiums are steady. We kind of took it a step further, and what I'm going to do for him is look for some older date half-ounce gold eagles. And now the reasoning behind this is the trend in the collector market. Remember, the collector market and the bullion markets are separate, but they're not sometimes. And this is a great example. The trend in the last few years has turned towards dealers selling modern coin sets. And the reason for that is we had some collector interest in the modern coins early on, a few years back. Also, though, these are the same big boiler room dealers that have been pushing United States gold, pre-33 U.S. gold, the St. Gaudens, the Liberties, the Indians, and stuff like that to their clienteles for years. And the premiums on those coins haven't steadied or done well at all. They've actually come down in price. Even with the price of gold going up, the premiums have dropped. And then you tack on to that what the dealer charged. A lot of them were 30 to 50, 80% premium on top of the rare coin premium on them. So a lot of people are buried in those coins. And as a dealer, you just can't keep selling the same people the same stuff when they're not making any money in it. So what do? Well, the easiest thing to do is come up with a different product line. And that's where we're seeing this whole shift to the rare coin market. Now back to my story about the guy buying gold and me recommending him buying half-ounce older date coins. Well, there's been a huge shift towards older date half-ounce gold eagles, and guys are putting together sets. Some of them, the mintages are extremely low. Some of them, the mintages are high, but you just can't find any of the coins because they're in vaults and in mint boxes still, and nobody even looks at the dates. So that's another point. Even though you have a coin that they made a gazillion of, it doesn't necessarily mean that there's any of them available to buy. And again, it's supply and demand. If you got a guy putting together a set, or a bunch of clients putting together sets, you might have a date or two in there where, they did make a bunch of them, but there just aren't any to find. And in order to find them for your client, you have to raise the bids. So good for the guy that owns the coin. And that's where we come in. We want to get our clients into those coins without the premium on them. Just buy them as bullion. Why not? You're buying gold anyway. Why not buy the older dates? And just maybe down the road, gold doesn't even have to move, folks. Gold could stay exactly where it is, but down the road, because the trend has changed, you could start seeing collector premiums pop up on bullion coins that just were bought as bullion. It's a great way to get into it. The problem is finding the coins for you. That's my job. So give us a call, 800-221-7694. There's a lot of different areas in the coin market. If you're set on buying gold, you can buy just gold, or you can buy just bullion as bullion, but you can buy certain products with a targeted recommendation. That's where we come into play, to where you can get into something that might develop a high premium, even if the price of the metal doesn't move in the coin. Again, a big thanks goes out to everybody at Financial Fest that came by and saw us at the show. We've got Thanksgiving coming up. I want to wish everybody a happy Thanksgiving and a very safe holidays this year. If you have any questions, my name's Carl Ladas, Don Gauze, Brian, and obviously Nick Grovich, and any of our wonderful support staff at the office can help you. Have a great holidays, and we'll talk to you soon. Thanks.